Right.
Of course, if some missiles attack won't surprise us, we'll be here until the end of the webinar.
Okay. Let's start, Ben. I think we are good to go. Let's start with
All
the
right.
disclaimer.
Yeah, so please read the disclaimer below. I know first daily market forecast does not provide a personal investment or financial advice to individuals or act as a personal financial, legal, institutional investment advisor or individually advocate the purchase of sale of any security investment or the use of any particular financial strategy. All investing stock forecast and investment strategies, including the risk of loss of for some or even all of your capital. So before purchasing any financial strategies discussed on this website, you should always consult with a licensed financial advisor. Yeah, what?
Yes.
Go ahead.
Okay, let's start with the introduction of final first before drilling down exactly. And then we're going to talk about some live predictions. We are having this monthly webinar. Again, we are going to map together some opportunities from the market today. We are going to see what the AI algorithm, the I know first AI algorithm thinks about the market today. We're going to map some leading sectors for the upcoming month, leading industries. We're going to talk about the Magnificent Seven stocks. And we're going to share some live predictions during this webinar, so stay tuned. As Ben said, there are several surprises during this webinar. As always, it's going to be interesting. I can guarantee that. Okay, I'm going to start with a quick overview of I know first. We are AI fintech company, and our main solution is a predictive algorithm that basically generates daily prediction for the financial market and identifies the most promising investment opportunities. We are utilizing several AI approaches, or we are combining different AI approaches into one AI algorithm. We are utilizing artificial neural networks, genetic algorithms, reinforcement learning, basically to predict the financial markets. Our predictive algorithm is generating daily forecasts for over 13,500 assets that are coming from different asset classes. Equities that are our main focus, but also ETF, sectorial ETF, regional ETFs, commodities, currencies, cryptocurrencies, interest rates, and also world indices with daily forecasts for multiple timeframes, short-term, mid-term, and also long-term. This is a global solution. We are covering over 50 global stock exchanges, including the leading stock exchanges around the globe. The main focus, of course, is in the US, but also the stock exchanges in the Europe, Asia, basically over than 50 global stock exchanges. And let's start with some interesting example from today, just in order to illustrate how the AI algorithm is basically working. Here we can see the very same forecast that one of our clients received yesterday on Sunday already, one of the leading hedge funds that utilizing the I know first predictive algorithm. We can see the strongest signals that the client that this hedge fund has received already yesterday. We can see that the strongest signals came actually from the bottom of this heat map, from the negative side. But we can see also several opportunities for the long direction and we can see the current movement of those assets right now. Basically, this is a customized investment universe that was designed by these leading hedge funds based on the assets that are relevant for them. They've built the entire investment universe. And if we, this is just a quick example to illustrate, we can see that today negative market was not, didn't come as a surprise to us. Since the end of July, we have seen a negative S&P 500 forecast. Here we can see the forecast basically from last week, from the end of July. We can see that the S&P 500 forecast was negative in this specific forecast for the 7 days time frame. And we also can see that the strongest signals, again, came from the bottom of the heat map, meaning that we should focus on the short selling side. Among the stocks that we can find here, we can find, of course, different stocks that are coming from different industry. We can find here Snapchat, we can find here Pinterest, we can find here General Motors, ASML, ETN. Don't worry, we're going to talk about the different indicators that you see here, but we wanted to start with a quick examples in order to illustrate how the AI algorithm basically predicting the direction of the market on a daily basis, and also how it actually providing us daily opportunities for both long and also short sell. We are going to talk about that during this webinar. So to introduce the team, I know first we have a unique R&D team that includes PhDs, AI and machine learning experts. We have math professor from Tel Aviv University. We have employees with the background of data science, math, statistics, physics. Dr. Lipa Reutemann is leading our R&D team, one of the leading experts in the field of artificial intelligence, machine learning, PhD from the Weizmann Institute of Science, a scientist with over 23 years of research and experience in the field of artificial intelligence for different verticals. Today with us, we have Ben Rubin, the head of our advisory services. Ben used to work before I know first in Bank Hapoalim, the leading bank in Israel, as a financial advisor. I am the co-founder and the CEO. I'm also lecturing at one of the leading universities here in Israel. And I used to work for one of the leading consulting firms before starting I Know First with Dr. Lipa Reutemann. In terms of the clients and the traction, we are working basically, the I Know First predictive algorithm is being trusted by the world's leading hedge funds, family offices, investment houses, brokerage firms as well. In this list, we can find different banks, different hedge funds, family offices. With Meitav Investment House, this is basically the leading investment house in Israel. We have launched 3 months ago. We have launched the first AI-powered mutual fund that's available here in Israel. We will talk about the performance of this fund. The AI algorithm that you're about to see has received several international awards, including from entities such as UBS, Entity Data in Japan, and also from the Geneva Wealth Tech Forum as the best international AI solution for the capital market. Yes, and in our website, you can get more information about those awards. We are also delivering for the third year already a course in the leading university here in Israel, fintech course, AI courses, and Ben is also part of the lecturing team. In our website, you can also find different media coverage from different entities, from different TV channels, from different magazines. I'm inviting you to check our website also for client reviews in order to find the best package that might be relevant for you guys. Basically, we are providing two solutions to our clients. First, we are using our AI algorithm in order to provide daily forecast for the capital market, daily forecast for the main indices, and also daily forecast that includes the best opportunities from the market. So if we're providing it based on the US market, we are going to provide to our clients the best opportunities for both long and also short sell from the S&P 500. On top of that, we are providing them an indication and daily S&P 500 forecast in order to assist them to basically manage their risk. On top of that, we have developed several systematic trading strategies. The idea here is basically to convert the daily forecast into a portfolio, and the idea is to basically to convert each systematic trading strategy to a financial product. We have just released the first AI mutual fund here in Israel, and in our pipeline there are additional investment products that we are planning to launch during the next month. The I know first predictive algorithm includes three components. By utilizing the first component, it's possible to identify basically the most promising investment opportunities, again for both long and short sell on a daily basis. The third component is basically providing us stock market intelligence. With the third component, we can receive daily prediction for the main indices, the S&P, the Nasdaq, the Dow Jones. We can identify leading sectors from the US market. We can identify leading industries from the US market, and we also can identify promising regions and also sectors and regions that we would like to avoid basically on any given day. The third component is a customized solution. Basically, this is the same solution that we have seen on the second slide. We are providing basically customized forecast for each client portfolio. Basically, we are training our AI algorithm based on each client universe or each client portfolio, and we are providing daily ranking, AI-powered ranking for the assets that each client is basically holding. We are going to talk about those three components during this webinar. So how we do it? The I know first algorithm is using information and data sets that coming from the entire financial markets. We are digesting on a daily basis thousands of correlation sets, thousands of data sets that basically representing the financial market, data that coming from the interest rate environment, from the equities market, from the commodities market, the currencies market. We are combining all those daily data that coming from the entire financial market, and we are adding it to our stocks database. We are managing database with historical data. And around the clock, the algorithm is learning from the daily data, learning from the historical data, and also learning from the combined data, and basically building on a daily basis without any human intervention, the complex network that exists in the financial market, the thousands of correlation sets that exist in the financial market. And before each trading day, the AI algorithm is basically generating the most updated forecast for the different timeframes that we see on the right side of this slide, for the short term, for the midterm, and also for the long term. The INOFIRS predictive algorithm is basically also learning from each prediction. And this is another input that we are utilizing in order to provide the daily forecast. So we are using basically AI in order to model the behavior of the financial markets and to identify opportunities, basically. In terms of the technology, we are combining different AI approaches into one AI algorithm. We are relying on deep learning, artificial neural networks, genetic algorithms, supervised and reinforcement learning. The most interesting thing about this predictive algorithm is the ability to separate and to focus on the most predictable assets from each investment universe. So if we are discussing the S&P 500 universe as an example, the algorithm on a daily basis separating and focusing on the most predictable assets from the S&P 500. And all the examples that you're going to see today are relying on this universe, the most predictable assets. Ben is going to talk about this, about the different indicators that helping us to actually to focus on the most predictable assets. Basically, we are using a very interesting process in order to generate the forecast. We are taking all the stocks, for instance, from the US market. We are applying our different AI models. And basically, we are focusing on the most predictable assets from the US markets. And then we are creating the ranking based on the signal indicator in order to identify the best or the top stocks for each time frame, for 6 time frames, short term, mid term, and also long term. Ben, tell us about the indicators, please.
Okay, so the forecast comes in the shape of a heat map, as we can see here. The green cells represent a long position, while the red cells represent short position. And we are using 2 indicators to focus on the best stocks that the algorithm is providing us on a daily basis. The first one is the signal. The signal is the number that is in the middle of the square, as we can see it here at 152.28, for example. And the signal is actually represent the predictive movement of the asset or the potential movement of the asset. And it's helping us to rank the entire investment universe in each and every investment world. From the strongest stocks are supposed to move up, that we can see here, for example, GRUB in this case, with the highest signal, and the signal goes down to the right up until the bottom right corner of the forecast, in which we see the strongest movement down. In this case, CORT has the strongest movement down with the negative signal. The signal is our internal index, moves from minus infinity to infinity, and actually goes through all the 13,500 assets that we cover and help us to rank them from different entire universes. So we also can see and get a global picture of where are the best signals in which country, in which universe, in which sector, and even in the stock picking process, and seeing the best signal and focusing on the best signal, the strongest signals. The second indicator that we use is the predictability. We can find it in the bottom left of each and every square. It's a really important indicator. Actually, tells us how good the algorithm can read this specific asset or can predict this specific asset. It's a Pearson correlation measurement, and it moves from 0 to 1. 0 represents 50% probability that the asset will move to the predicted direction, and 1 represents 100% actually for reading this specific asset. So in both cases, we are looking for higher indicators numbers, strong indicators, high predictability, high signal, and focusing on those 2 good indicators will bring us a good result, as we see a few examples ahead. So this is the forecast. It comes in the shape of a heat map, green cells, red cells, pretty simple. And we're using those two indicators, the signal, which is in the middle of the square, and the predictability, which is in the bottom left of each and every square. So basically, after logging to the service, you are receiving this specific forecast, the 6 time frames forecast. Every forecast has it as at 6 time frames from the time frame of 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. Every day you get those 6 time frames with the best stocks in each and every time frame for long and for short. And so in this example, we can see the entire heat map. Of course, it's divided to 2 frames for the shorter time frames that combined with the 3 days, 7 days, and 14 days, and the longer time frames as 1 month, 3 months, and 1 year. And of course, you can switch between the two by pressing on the tab on the bottom of each and every file that you get of the forecast. And switching between the short term and the longer terms. All right, so let's see some examples from today's market, today interesting market. We got pretty volatile market right now, and we can see here the top 10 package, our really popular package that contains the best 10 stocks for long, best 10 stocks for short, and the algorithm chooses from the entire US market those 20 stocks to invest in. In this specific case, I deleted all the other stocks and just left the first one and the 5 bottom one. To this specific case, we are seeing that the signals are stronger in the bottom of this forecast, and we can see that the more of the forecast is red than green. You can see the red color is actually ruling the forecast right now. That tells us, of course, that we are in a short position before the market opens. It's actually sent yesterday to the clients. You can see here the forecast date. It's in August 4. This I actually took a screenshot before we started this webinar with the performance of those stocks. And we can see Snap, Pinterest, Comtech, FVRR, which was kind of green, and in the top of the forecast, this 3 days forecast, 3 days ahead, and we can see the S&P is pretty in a red cell right now, and also the result of it are actually fits to the algorithm forecast. We can find the BITF here at the Bitcoin related stock moving down more than 9%, and FVRR, which is in the green side, actually was going up. So this is just an example from today's forecast, from the forecast that our clients get to help us to focus on the best stock, even in this volatile day that nobody really knows what to do or where to go. And it helps us give us a direction. And this is, of course, just the short term. We have they are receiving, of course, 5 more time frames: the 7 days, the 2 weeks, 1 month, 3 months, and 1 year. And in this specific top 10 forecast.
Ben, what's interesting about this forecast? First, Fiverr FVRR is already jumping by more than 2% against the market. This is the first thing that is interesting. The second thing that is interesting, we can see that this forecast was basically sent yesterday to our clients before the markets open. As we saw on the beginning of this webinar, it wasn't a new trend for us. It didn't come as a surprise, this negative momentum. And the top 10 package, as you said, includes also daily S&P 500 forecast, which is also very, very useful in order basically to migrate the risk, to manage the risk. Usually when we see that the S&P 500 forecast is positive, we do suggest to focus on the long side. However, when we see that the S&P 500 forecast is actually negative, as we see here, we do suggest to focus on the short selling side.
Yeah, and let's see some more examples for that from the recent days. We can see that already in July 31, the S&P was colored red in the top 10 forecast, and we can find the best 10 stocks to short that the algorithm gave us. And we can see that actually the Bitcoin related stocks were painted red already 6 days ago. And we can find here we can see the performance of those 10 stocks and compared to the benchmark. Here we can find the average of those 10 stocks. If we're taking the 10 stocks average, we'll get the performance of return of 9.98, while the S&P in the same period of time of those 3 days from July 31 up until August 3rd moved down by minus 1.65%. So this is the 3 days forecast. We also, of course, provide the 7 days, which we from the 28th of July. The algorithm still saw the S&P in red, in the red side of the map. And here we can find the stocks that we actually, some of them we saw today, if it's Pinterest or General Motors or Snap, Ford, that we are seeing in the red side of the forecast, and actually giving us a good performance while the S&P went down more than 2%. Of course, it's not just a short forecast. In each and every forecast, we have long positions and short position. In the long position of that forecast, we can find a lot of stocks such as the EVRI, telecommunication, MHK, MMM, that went into the long position. So the algorithm can identify opportunities for long and short in every market, basically. In a going down market, in a going up market, the algorithm provides us opportunities on a daily basis. Of course, focusing on the best signal and the best predictability is really important. And as we go up the time frames, we can see that the signals and the predictability numbers are much higher and stronger. And that's why we advise you to focus on the longer time frame, and giving more weight to the longer time frame than the shorter time frame. Here, for example, we are seeing a really interesting forecast from the indices universe. This specific forecast include more than 175 indices from around the globe, main indices around the globe. And to whom you won't know some of those symbols, I'll help a little bit. JNIV is the volatility index in Japan. So the algorithm actually saw the volatility comes. We heard that yesterday the Nikkei fell more than 10%, and we saw this volatility actually here by seeing the volatility index of the Nikkei in the top of the forecast, which means volatility goes up, the market may go down. And we also saw it for the VIX in the US S&P 500 market. We can find it, we can see KRX, which is the regional banks in the US. VXN, it's the volatility of the tech sector or the NASDAQ. We can find it here as well in the upper side of the table, and it's actually moved by 20% in those 7 days. Housing sector or small cap, as we can find here, SPCY, and the banking system, BKX, the financial banking index that we can find here, and the real estate, of course, also here with RMZ. This specific forecast is really popular among our institutional clients. It's giving us the big picture of what's going on in the markets, and investing in a more of a global way and not in specific stocks, more like ETF or sector or indices to focus on. So this is really popular, and I really like this specific forecast. We're going to talk about it a little bit more in a few minutes. So other forecasts from the last days, we can find it in the 23rd of July. Also stocks to buy, ZBRA from the tech sector, and the other stocks that we can find here that the algorithm suggests to focus on. Of course, if you're seeing the V to the right, it means that the algorithm was right. X's means that it was wrong in the direction. So it's not 100% working all the time. Of course, there are some mistakes, but the majority of the stocks went to the direction that the algorithm predicted. And the average of those stocks was much more was actually positive and bigger than the movement of the S&P at the same time. Jumping into the 14 days, actually, 14-day forecast, we can see that the signals here are getting a little bit higher, and the predictability is also higher. The higher numbers in the predictability and the signals. And also, I remind you, suggest you always focus on the high predictability levels. We can see, for example, in this forecast, AMHO, the stock has the highest signal and the highest predictability. This is a winning combination. If you see those two are in the same stocks, and you see AMHO in a multiple time frames, you can also see it in the longer time frames. It's a good opportunity to invest for long. We can see that the actual stock moved 22% in those 14 days since the algorithm gave the positive forecast for this specific stock. And again, all those stocks were chosen while the market went down by 2%, almost 3% actually. So it's identifying in opportunities while in a going down market. I mean, focusing on long opportunities in a going down market, it's pretty unique. We have to say that. And we're seeing that the 2 weeks forecast was really successful from the 15th of July. And for the ones that more swingers or invest in the long time periods, we can find the 1 month forecast. Also, we can see the predictability level here are higher. I remind you, 0.5, for example, 0.5 predictability means around 75 probability that the asset will move to the predicted direction. So it's a high predictability. It's pretty good for 1 month, but we'll see even higher numbers in the 3 months and 1 year. Also here you can find interesting stocks that the algorithm focused on in the 1 month universe that you get from the algorithm. Every day, I remind you, you get 6 time frames. You get all the time frames. You don't have to choose one. You don't have to choose the 3 days or the 2 weeks. You get all of them. Some of them have similar in some time sorry. In a couple of time frames, you have like similar stocks. It's not that you have different stocks in each and every time frame. You can find some stocks in multiple time frame, and that's even better. I mean, if you're seeing stock multiple time, choose it. It's actually pretty good. And again, focusing on high signals and high predictabilities, as we can find in the 3 months. Here we can see that the predictability level is really high. It's really good. We suggest focusing, of course, on this specific time frame. And again, we're seeing stocks from different universe. If we MSTR, which is Bitcoin related, the AMAT from the semiconductors, and the BRA again from the tech sector. And in those 3 months, the average of the stocks was 17%, while the S&P moved almost 8%. And the last time frame that we find here, it's the 1 year time frame. And here again, we can find high predictability, high signals. We're seeing a lot of actually semiconductor stocks. This was generated 1 year ago on August 4th. And the algorithm told us to focus on semiconductor stocks. You can find here as AMSC, LRCX, AMAT, Google, ASML. a lot of the familiar semiconductor stocks, and also this specific forecast made a pretty good performance in the 1-year time frame. Another interesting,
just before we move into the ETFs, one important remark. Basically, you can choose the investment universe that is relevant for you. If you prefer to focus on S&P 500 stocks, you can choose the S&P 500 package. If you prefer to receive Russell 2000 stocks, Russell 1000 stocks, Russell 3000, you can basically customize the investment universe based on your investment approach. And then from that point, on a daily basis, you're going to receive the best opportunities for the short term, for the midterm, and also for the long term. The top 20 package also includes daily S&P 500 forecast, as we have seen in the first example. And it's a very popular package since it's providing you, on top of the daily opportunities, it's also providing you a very powerful stock market intelligence prediction or stock market intelligence tool that basically giving you some guidelines regarding the direction of the market, whether it's a risk on market or risk off market, and it's helping you to focus on, on the right stocks at any given day, basically.
Yeah, and another universe that we have packaged for is the ETF package, which I really like. Here we can find the American ETFs from different kinds and a variety of ETFs. We can find it, as we can see, the banking KB banking system in the US. We can find the home builders, which was really surprising in 2023 and even in the last few months. And we can find the Russell 1000 universe. You can find IWC here. So a variety of ETFs, and you don't have to focus and invest only in one stock. Each one of those ETF is probably made or combined with more than 40 or 50 stocks in it. So you have a variety of stocks that you invest in and not just one, and different geographical places that you can also focus on. If we are checking the 1-year forecast, we can find here again the QQQ, the home builders, XLK, the technology sector, the financial sector, leverage type 3. You can find the FAS and TQQQ, and different ETFs from the US market. And we actually have a live forecast from today. This what's our clients got today from the ETF package. This is, of course, I took the screenshot of the bottom of the forecast, and we can find different ETF such as XOP, which related to the energy. You can see FAS, which is the financial sector, and the DXG, of course, that represents the Japanese market, and that actually go down by 6% in the beginning of the webinar. That's what I succeeded to check before we started. So
actually, it was sent yesterday. It was sent basically yesterday before the opening of the week. So the very negative momentum that we have seen today in the Japanese market was already predicted yesterday and also last week, basically.
Yeah, so if you had this forecast, you won't be that surprised of what's happening right now in the market, and you can prepare yourself, by the way, also to what's going on in the market. And you also can see the longer time frame and see what's happening there. Maybe we'll see more of a positive point of view of those assets. So maybe it's a buying opportunity. Low the prices are pretty low right now. So right now, the 3 days, of course, it's not just for today, it's a 3 days forecast, but also those returns are already enough, I think, even for one day, if you can take your profit and then close the position, doing 7% in one day. So this is just an example of the today ETF forecast that our clients got today and actually were sent yesterday. We have some more examples for the short universe. Yaron, you want to talk about those?
Yeah. Of course, the actually negative momentum or negative market that we have seen today is part of the market. We have seen it before. It's not the first time that the algorithm is basically focusing, generating actually negative prediction for the market and focusing on the short selling side. On the left part of the slide, we can see a similar example from March 2023. Back then, we have received negative prediction by the algorithm for the entire market, for the entire S&P, and also the stocks with the strongest signals, basically like yesterday, were coming from the short selling side. Among the stocks that the algorithm was suggesting basically to short sell, we can find here several stocks from the banking industry in the US. We can find here Silicon Valley Bank, we can find here First Republic Bank, and actually this forecast was sent to our clients 3 days before the collapse of Silicon Valley Bank and First Republic Bank. And on the right side, we can see similar example from 25th of February 2020. While the market was basically positive, we started to see some very negative indication for the general market, and also the strongest signals came from the negative side. And after a few days, we started to see the effect of the coronavirus over the market. We can see that if someone could take these opportunities and to basically to short sell, he could, make a lot of money, or he could also avoid those losses or avoid this negative market and stay out of the market until we will see some positive forecast. Basically, similar situation as we see today, basically. Yes.
Yeah, and another example for that short timing positions that the algorithm provide us, we can find in the Intel stock. We had a negative, actually we have all this year, I think Intel was quite negative in the algorithm, but we can find a 3-month forecast from the 5th of June, while Intel was in the bottom of the forecast with a strong signal down. And this was actually generated around here, the 5th of June. We didn't see a lot of movement in those days, but if we are taking the 2 months forward, we've seen that the Intel stocks dropped more than 35% in the 3-month period. So this is one example of the timing of the algorithm. Again, with the stocks called MHK. In the 12th of July, we had a pretty good forecast, a long forecast for this specific stock. And we can see just before it jumped in those 2 days up until here, the algorithm gave a pretty good forecast for it. It happened again in July 22. When the market actually went down, the algorithm provide a good forecast, a good long position for the specific stock MHK. And we can see it in the bottom, in the top of the forecast, in the top left corner, the strongest signal, good predictability. And in that week up until the 29th, we can see that the stock jumped from around 128 to 162. More than 25%. Same goes with the stock ZBRA. The timing of the algorithm was pretty amazing. 19th of April, that's around here. The stock went down again. You have to be patient. It's not always happening in the first day or in the first 3 days. So here the stock still went down, but then we can see that the 3 months after it, the stock went up in a really good way, in a good performance. And MHO, and the same goes with the 28th of June, which is around here. The stocks again went down. The 1 month forecast up until here, you'll do the math of the performance and the returns that the stock made in a 1 month forecast. So again, the timing is really good. And sometimes the stocks is going down a few days, but don't get nervous. Think about the long term. Think about the 1 month, the 3 month, and you'll see the results after it. And so I want to talk about a little bit about the market right now and how the market is, how the algorithms actually know how to focus and see those special crises that we see in the market or big movements that we are recognizing in the market. We had a few of those in the last few months and years. So I want to do a quick overview of those. We, of course, as Yaron said and talked about a few slides ago, the COVID crisis that we found in 2020. Not going for a short position, maybe reducing my long position or not doing anything in the market, cash it out, waiting a little bit. It can help us and give us a market intelligence besides long and short position. The same goes with the last April. If you remember, we had a pretty negative month in April. While the market went down, the algorithm gave us a really negative forecast about the market.
The market went up before, not went down. Why the
Yeah,
market
we
is
have
going
it.
up? Yeah, the
Well,
market was going up.
went up. Yeah, so the market
Yes.
went up up until the 1st of April, and then we got a really negative forecast for the S&P, for the Russell, for the Nasdaq. As we can see here, all of those indices were painted red. If we're seeing that in our forecast, if we're seeing one of those indices in red, we have to think twice and see what's going on at the market. And besides seeing all those indices painted red, we saw the VIX and the VXN, which is the volatility indices, in the top of the forecast, which means for us that volatility is ahead. So combining those two can really help us identify some cases in the market. And even the last drop of the Nikkei 2025, as we talked about earlier, we saw that big decline that happened yesterday, before trading, and the algorithm also identified this case. We can find in the 2nd of August, the forecast here for the VIX, the American, by the way, S&P 500, and the Nasdaq, and also the JNIV that you see here. This specific index is the volatility of the Nikkei 225, and if it's up, it means that the volatility is rising, which tells us maybe that the index can go down, and more than that, we actually in the indices forecast saw the Nikkei 225 in August 2nd in the red part of the table, as well as top X, which is also a Japanese index. And we didn't also just saw it in the 3 days, we saw it also in the 7 days. And even day after, the 2 days after it, we can find it again in the forecast that was sent yesterday. Those volatility index are in the top 3 of them, top strongest signals actually in the index forecast. We can see it in the 3 days, we can see it in the 7 days, and of course finding the Nikkei and the top X in the bottom of those forecasts So the algorithm actually identified that movement and of the Nikkei 225, and we can use this specific indicators, of course, as the market intelligence again to tell us what to avoid and maybe staying out of the market. It can help us save a lot of money, even more than buying some stocks or ETFs. If you just go out of the market and don't lose money, it could be really helpful, of course. So this algorithm is also, besides providing us opportunities, can also be used as a market intelligence tool. And we can see it again in the forecast, in the indices forecast. We saw this picture from August 2nd. The VIX is in the top of the forecast, the S&P and the Nasdaq, and the 5 years interest rate and 10 years interest rate, by the way, which we also provide forecast to, are painted red. And we see the results today, the VIX with a big jump, and the FBX, TNX, the government bond for 5 years and Treasury government bond for 10 years and 5 years are painted red and going down. The Dow Jones Industrial, the S&P, and the Nasdaq are all down. This is again a picture that I took before the trade started. So in the beginning of the trading day, sorry. So this is how we can use the algorithm as a market intelligence tool to help us avoid some areas or focusing on some good assets so you can invest in. And again, the third thing that you can use this specific forecast and algorithm is and actually taking advantage of this volatility. You know, some of you can say that what can we do in this going down market? You can actually take a short position. Some of you can take a short position if you know how to do so. Of course, there's more risk involved in those positions, but you can take advantage of the volatility and focusing on the best short position that the algorithm provide us. And after seeing that the index itself is painted red, we will feel more comfortable to short those stocks. We can find here the forecast for 3 days, 7 days forward. And I want to show you some really interesting forecast from the 25th of July. This forecast is actually not provided to in private clients. It's only for our institutional clients. And if you know the GEEX level 1, which is the main 11 sectors in the S&P 500, and I checked this specific forecast from the 25th of July, almost more than 1 week ago, and I saw this quite of amazing view. The algorithm, as we said, rank those 11 sectors from the best to be in up until the worst. We can find in the top of this specific forecast XLRE, which is the real estate. We can see it here. We can find utilities, which is here. We can see the 1 week performance to the right. And in the bottom, we are seeing XLK, the technology sector, which has been the worst sector this week. And XLY is the consumer cycle, is right after it. And then the financial sector and the energy sector painted red. The industrial is like in the order of the signals actually that the algorithm provide us. Basic materials is also red, and healthcare is in green. So being in the right sector, usually that's one of the most important thing for the institutional client. Just be in the right sector, be where you should be, and the algorithm really helps to do so. You can use that in our ETF package as well. It's not focusing on the 11 big sectors in the US market, but we have many other sectors and ETF that this specific package providing you. All right, I want to talk about that Magnificent Seven, or in this case, Magnificent Eight. We add Netflix to this group, and we can find that, and I think most of you, which are looking at the market and from the beginning of the year, you're seeing how important are those Mag 7, these big seven stocks that's actually is holding I mean, a lot of the indices that you focus on the ETFs are holding those specific stocks and kind of controlling the market. We can find here too a really good example for this control. To the right, we're seeing the most held stocks by hedge funds in the US market. We see that Microsoft is actually being held by 44% of the hedge fund in the US market, and then you can see about Amazon, Alphabet, Apple, Facebook, Nvidia, and so on. And the other picture, we see the weight of the 5 top holdings in the S&P 500, which is right now 27%, which is, I think it's even more than that. That's not the absolute update for now. It's up until June. I think it's actually a little bit more, but we can see a lot of that this specific 7 stock are having a really big weight in the market and in the big indices, and they actually moving the market. And we actually provide a forecast for those Magnificent Eight. And adding to those 8 big stocks, we're also add in the specific forecast about the main indices in the US. We can find here the Russell, the Dow Jones, the S&P 500, and the Nasdaq. And this actually giving us a really good picture of where the market goes to. Those stocks are actually controlling the market and moving the market. So this is a bonus package that I'm going to talk about in a few more slides. Here we can find the forecast from the 25th of July, 2024, and here as well we can see that the algorithm saw that negative movement of the big stocks and the negative movement of the market of the S&P 500, Dow Jones that we can find here with NVDA, a big drop of NVDA, which was like the strongest signal down, the negative strong signal, and of course Amazon that we can find here. So I'm going to talk about this interesting forecast, interesting package in our special webinar sale that we have. So the first webinar sale that we have is buy one, get one. You get 2 packages from our webpage for $2.99 per month. It's no commitment. You can cancel at any time, but you can choose 2 packages for $2.99. You can combine, for example, the ETF package that we saw with the technology, with the S&P 500 package, with the indices package. You can make a really nice combination of 2 packages from our packages page. Yaron is also will send the link for this specific sale in the chat that you can choose 2 packages for $299 for a month. Of course, no commitment, and you can cancel it anytime. And
it's already there. Can you see it?
Yeah,
okay,
you can see it. You can click it in the chat button and get into this link. The second package, the second webinar deal actually is really interesting. It's a 6-month subscription, and you get to choose 2 packages for $269 per month, and you get for free the big 8 package that I just talked about. So you can choose any 2 packages that you want and combine it with the big 8 package that you get for free for 6 months, of course. As I mentioned earlier, this specific package, the B-Gate package, is exclusive to this webinar sale. You cannot buy it right now in the package page. So if you want this interesting 6-month subscription, you get 2 packages from any universe that you want. You can take, of course, the energy stocks. You can combine it with S&P 500 stocks. You can combine it with the ETF, and of course, you get to choose and switch the package every month. You can choose any 2 packages that you want every month and change it on every month. So I think this is a really great deal, and it's available for the next 24 hours. Both of those sales are available for the next 24 hours. So do it quickly. I repeat it, the first sale is buy one, get one for $2.99 per month. No commitment, and you can cancel it every time, choosing any package that you want. Of course, just without the B-Gate. The B-Gate belong to this specific webinar sale, as you can choose 2 packages for $269, 6-month subscription, and you get the B-Gate package for free for 6 months. So you can use those 2 webinar sales in the next 24 hours.
The 2 deals are available on the chat bot and the chat window, so you can take advantage of those deals, as Ben mentioned. By the way, the second deal that Ben just provided, it's also possible to change the 2 packages, right, Ben? Every month.
Every month you can choose and switch and change those 2 packages to any package that you want. Click it and try it. You can see the packages on the page. You can switch between the packages. We have a variety of packages there. I think it's really a good sale. Okay, let's move on to another product that we're making for our institutional clients. It's artificial intelligence strategies. We are taking actually the forecast that you just saw in the first part of the webinar and making it into interesting automatic strategies. And I'm going to represent a few of them. All of those strategies are the stocks in those strategies are actually taken from the S&P 500 index that we all know. And in another section, we are using the Geeks level 1 and the Geeks level 2. To whom of you don't know what's the Geeks level 1? The Geeks level 1 is the main 11 sectors in the US market, for example, XLK, technology, XLE, the energy, XLU, utilities, and the level 2 is the industries that belong to this specific sector. You can see that under, for example, under the financial sector, which is the level 1, we have banks, capital market, insurance, and capital goods that belong to the level 2. So using those level 1 and level 2 sector and industries, we build a few automatic strategies, and I'm going to show you an overview 2 of them. The strategies that we have is the high performance strategy, as we can see here. The blue line is the strategy. It's the performance strategy of the INO first, while the orange line is the S&P 500 performance in each and every chart that you'll see. So we have the high performance strategy that was taken from January 2020 up until 2024, the beginning of 2024. High performance strategy is actually focusing on the best 20 stocks from the S&P 500 on a monthly rebalance. The algorithm is providing us the best 20 stocks to hold for long or short in each and every month. It's a really interesting strategy. The risk here is higher, but you can see that the return in these 4 years was 377%, while the S&P did 47%. We have a long only sector strategy. That's the algorithm focusing only on the level 1 sectors. We're going to talk about it also. Long short SPY strategy. In specific strategy, the algorithm is just doing long or short on the SPY, the ETF SPY that we all know. It's a simple strategy. The take profit one that's focusing on taking profit and staying above the S&P 500 benchmark, and a low risk strategy that's focusing on low drawdowns and less volatility, as we can see here in the performance. So this is the 2020 model that I talked earlier. You can see the return here each and every year in 2020, 21, 22, and 2023. And of course, I took a little snapshot from the live portfolio from April 3rd in this year. As I told you earlier, we saw that in the beginning of April, the algorithm gave us a negative prediction for the market. And in this specific strategy, he gave us 20 stocks that we should short on. I mean, you can choose between long position and short position. In the last April, he chose 20 stocks that we should short. And we can see here the performance of those 20 stocks in this period from April 3rd up until May 1. The algorithm made 7.2%, while the S&P went down by 3.18%. Which was really impressive to our institutional client. Here we can find the results of this strategy in each and every rebalance from the beginning actually of the year up until the end of May. Another strategy which is interesting is the algorithm chooses the best level, 3 level 1 sectors to be in. As we talked about it earlier, for example, the XLRE, the real estate, or XLK, the algorithm gives the best weights and sectors that we should focus on. It's interesting to see it here. Here we can find the 11 sectors of the S&P 500. The one that I've colored with yellow means that the algorithm suggests to be in, and combining it with the SPY for reducing the volatility. And here we are seeing each and every month which sectors the algorithm wants us to be in. It's a long-only strategy. I mean, there's no shorts here. We are not shorting the market. We are always long on the market. And it's pretty interesting to see the variety of sectors that the algorithm uses. And also the focus of the XLK, which one of the more dominant sectors in the last year. And we see that the algorithm shows in the multiple times. And actually, the algorithm was in the right sector or more than one sector, like the best sectors of 41 out of 57 rebalancing that we have in this strategy. It's a pretty amazing stats that we out of 57 rebalancing, we chose the right sector 41 times, and we can see it in the performance and in the returns of this strategy in 3 years. And the third strategy that I want to show you is the Meitav mutual fund, Israel mutual fund. Again, Meitav bought this specific strategy, and a mutual fund was launched 3 months ago, a little bit more than 3 months ago. And we can see the performance of this specific strategy in all the last 4 years, and even a portfolio from that strategy that we are choosing. The algorithm choose 40 stocks from the S&P 500 to long it. We combine it with 2 industries, and if it's the real estate or the home builders, I hope you can see it here in the bottom. Anyway, this specific mutual fund, this mutual fund is actually leading the category of the 3 months performance, first place, which we're really proud in, and made the more than 9% return in the last 3 months. So this is something that we're really proud. One of our strategies is being used by the biggest, one of the biggest investment house in Israel, which actually made it a mutual fund that is available for the Israeli clients. So if some of you are in our webinar crowd is institutional clients, please feel free to address us by the website or by my mail that you can find it on the screen here, and we will provide you a solution or strategy that fits for you. All right, so we saw a lot of packages that we have in our website. We talked about ETF package, we talked about S&P 500 package, we talked about top 10, we talked about indices. I'm going to show you a few more packages, the popular package that in our website, the crypto package, which is really volatile today. But again, we also provide long and short. I remind you, in each and every of our packages, we're providing long position, short position. You can choose or see which one are stronger and focus on them. So with this specific crypto package, we can see the result for 7 days and even a longer period of 1 year. As we can find it here. We also have the world indices package. Again, that's giving us more than 175 indices from around the globe, from the US market. It's a really interesting package. It's also providing us a market intelligence package, market intelligence view. And also you can find it in the webpage in our website. We have a fixed income forecast. We have a commodities forecast, which is also really popular. If you can find the commodities from the uranium, wheat, platinum, of course, the oil, and many more. Currencies, to whom of you are trading the currencies, which is really interesting now. We actually have an example from today. This is today's currency forecast. You can see the USD compared to the MXN went up, and in the bottom we can find the Australian dollar compared to the Japanese yen going down by 2.5%, which is a lot in currencies, by the way. We can see the difference between the long position to the short position and the live performance of that specific forecast. And of course, to different stocks exchange around the globe, if it's the Canadian Stock Exchange, European stocks from the UK, from Japan, of course, Italy, Australia, Hong Kong, and both stock exchanges in China are also available for you guys, and the Indian market as well, which is a really popular emerging market. That have a lot of we have some viewers of it today here, so we can find we had a big collaboration. Yaron, you want to talk about the collaboration that we did with
basically we are providing daily prediction for more than 1,500 Indian stocks, and basically Shunya, which is basically the Indian Robinhood, the zero commission platform, they've implemented our predictions within their application. So this is the first AI-powered predictive algorithm that have been launched in India, and we are very proud, about this partnership. More than 400,000 clients that having the opportunity to utilize artificial intelligence in order to identify opportunities on a daily basis in the Indian market.
All right, so we talked about the past, we talked about the present, and let's talk about the future and what the algorithm sees ahead. We're giving you a glimpse for the institutional forecast of the 11 sectors, the level 1, GEEX level 1 that we just talked about. And so what we are seeing today, sorry, in today's forecast. And this is from today, of course, the live forecast we're seeing. Sorry, that the best sector to be in the next month is the real estate forecast, the XLRE, and the utilities as well. Although we can still, I already told you to check the predictability. We need to see a high predictability level as we see in the XLC, which is the communication sector. So right now, the real estate and the communication are the leading sectors to be in. We can find the energy in red and the technology also being in the red part of the table. But I remind you, it's only the 1 month forecast. In different time frames, we can find some sectors are changing with the signals and the strength of them. In the level 2, if you go into the industry level, we find kind of the same look. We can find the communication, the utilities industry, the real estate, RWR, it's the real estate, and XHB, which is the home builders. The home builders looks pretty good. And I know when I remember in the beginning of the webinar, it went down pretty roughly in the beginning of the trading day, but maybe it could be an interesting buying point for this specific sector. Again, communication, real estate, and the home builders looks quite good. Energy and semiconductors looking, it's XSD actually looking a little bit reddish. And if we are looking on the 1 month forecast, the indices forecast to see what's happening in the market. In the green part, we can see still those 3 volatility indices: the VIX, the VXN, and the JNIV of the Japanese market. We can find again the home builders and the real estate as we saw in the level 1 in the green part of the table. Regional banks looks also kind of green, and the small caps that we can find here, SPCY, S&P 600 small caps looks green. But of course, I sliced the forecast into 3 parts because it's too long. And in the red part of the forecast, the S&P 500, it's actually a little bit reddish. It's not such a strong signal as we can find it here. It's minus 0.05, but it's still red. We see the Chinese market. We can find Russell 1000. We can find the DAX, the European stocks, looking more reddish. And in the bottom, again, we can find Japan still in the red part of the table. European banks also doesn't look pretty good right now for the following month. And generally speaking, Europe doesn't look that good. Also, Hong Kong and Taiwan is in the red part of the table. But again, this is the 1 month prediction. Of course, if you purchase this package, you can see what's going to happen in the 3 month, in the 1 year, and even the shorter time frames. And that could be a different picture, which is giving you a glimpse for the 1 month.
This is an important point. This is a glimpse from today. This is the forecast from today. The forecast is being updated on a daily basis based on the most updated opportunities that the algorithm is identifying. During the 1 month period, there might be a rotation in the market. So we do suggest to monitor this prediction on a daily basis, and also the ETF's prediction that Ben has shared with you. Last month, we have seen during the month, we have seen a rotation from the semiconductors to the real estate. So it's we do suggest to monitor this prediction on a daily basis in order to make sure that any rotation in the market is being taken into account, basically.
Yeah, and we're going for the last forecast for today, the Magnificent 7. We're watching the 7 days. We're seeing Apple and Meta is the only one which is more greenish, but the signal is really low. We're seeing most of the forecast is still red, so we are expecting some volatile days in the next few days. And I remind you, this specific package comes with our second webinar sale of buy one, get one for $269 per month. And you get this Big 8 package for free. And you can go and see updated and get updated every day what's going on in the market in the shorter time frame, in the longer time frames, and you can choose any two packages that you want. You can combine the S&P 500 with the ETF. For example, you know which sector is the best, and then choosing a specific sector, specific stock, sorry, from the S&P 500. And the second webinar sale that we have is buy one, get one for $299 per month, no commitment. And you can, of course, change your package once a month. Those two webinar sales are available for the next 24 hours. So you have to do it quickly if you want to enjoy those sales. Last time I'll repeat it, it's a 1+1 for $299 per month. No commitment. You can change the package every month. The second one is a 6-month subscription and get two packages for $269 per month, and you get the Big 8 package for free for 6 months. All right, Johan. Let's answer some questions because I'm seeing there's a lot of questions.
Yeah, the first question that I see is, what is your suggestion for the two packages? So I think you have a. I think you have an answer for that.
Yeah, I think I answered that, but I'll say it again for today. For this market specifically, I will take the ETF package and the indices package maybe, and combine it with the S&P 500 package. Keep it in the low risk, being in ETFs and S&P 500 stocks, because we're seeing the volatility in the market. But I don't like a big risk, so that fits for me. I guess there's a lot of people, a lot of investors that seeking the risk and want to be involved in high risk stocks. So we have a solution for that. You can choose the aggressive package, or the top 10 package that chooses stocks from the entire US market and combine it with some other, of course, package that in the deal. So for a low risk investors, I recommend the ETF and the S&P 500.
Yeah, I like the S&P 500 stock picks as well, and also the ETFs. And I think the top 10 is also a good choice, since it also includes basically the daily S&P 500 forecast, the daily updated forecast. But as you said, the risk level is higher there. For those of you that are focusing on short-term trading, I would suggest also to utilize the top 10. We do have also dedicated package for options trading. It's part of the options that you have in the landing page, so you can utilize this as well. But I do suggest to use the top 10 in order to monitor the changes in the S&P 500 direction, and in order to take advantage of the volatility that we're going to see in the next coming days. Okay, let's try to answer more questions.
Yeah, sure.
Okay. Which data are you using? Are you using news, or are you using data that coming from the financial market? So basically, we are relying on objective data sets, on numbers or quantitative data sets that basically representing the entire financial market in order to generate the daily forecast. There is a question, which time frame is the best in your opinion? And
Yeah, I like the 1 month and the 3 months time frames. As we saw in the examples, in those time frames, the predictability level is the highest, or pretty high. I mean, the 1 year is the highest, but it's pretty high in those time frames. So even if you are trading on the short time frames for the 3 days or 7 days, you can use and look at the longer time frames to see if you see the stocks that appeared in the shorter time frames as well. It's giving you more confidence. And of course, again, seeking stocks that in multiple time frames will be better for you, and stocks that have high signal and high predictability level.
right. Okay, more questions. Do you providing also gold prediction, gold and silver prediction? Yes. The commodities package includes also daily forecast, as Ben said, for both gold, silver, crude oil, and more than 70 other commodities, leading commodities, basically. Okay. We answered regarding options trading. Yes, we do have several solutions for option trading. Please go over the links that we have shared in the chat window. Is it possible to utilize the AI algorithm for short-term trading? The answer
Yeah,
is
of course.
yes. Yes. Sorry.
Yeah, we even got a special package for the short term. That the time frames there are from 1 day up until 6 days ahead. You can find it in our packages page, the website.
Right. My tip for you, if you need to take one tip from this webinar, I do suggest to utilize the different, as Ben said, the different indicators that the AI algorithm is basically generating on a daily basis, and to give more weight to the predictability. All the strategies that we have developed are relying on the most predictable assets, and we do suggest to choose stocks that the most predictable stocks. We do suggest to combine different time frames when you're choosing your stocks, and also take into account, try to focus on the most predictable assets. Based on all the analysis that we are doing, we see that the outperformance is always coming from the most predictable assets. Okay, Ben, thank you very much for this very interesting webinar.
Thank you, everyone. And thanks to the listeners and that following us every webinar, our monthly webinar. So we of course invite you to enjoy the special webinar sales for the next 24 hours. And if you have any other questions, feel free to ask us through our website. We'll be happy to answer all of your questions. And thank you all for listening.
Stay safe, Ben. Thank you.